The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Good morning, everybody. Tom's out this morning, jumping right into the markets. We're picking up basically right where we left off yesterday. Things look pretty rosy coming into the open and bell. Markets begin trading. Within a few minutes, we escalate to the downside. We're looking at an S&P negative by about 8 points right now, trading at 38.18. We're essentially right where we were to finish the trading day yesterday. We've been chopping around between about 3,800 and 3,840 overnight. We make a high intraday of 38.51. We've now given up 36 points approximately in the S&Ps. The next stop, you could say the lows we had at about 6:45 a.m. this morning, that level 38.07. The lows overnight, 38.01. NASDAQ 100, talk about some volatility. You back things up to where we were Wednesday evening into Thursday morning. You're talking about a price level of 13,352. We're a solid 500 points right now below that price level. The lows made overnight, 12,662. You see the escalation, though, beginning right near the opening bell. We do spike higher for the first 10 or 15 minutes. We climb above 13,000, and since then, we've given up approximately almost 200 points in the NASDAQ 100, trading at 12,851. Commodities, we got to talk about Bitcoin, 47,055. The volatility continues. Crude giving up some of the gains it had recently. We make a high yesterday of 63.81. Crude's trading at 62.37. Gold having quite a tough day as well. Gold really escalating to the downside. Zooming in on the action from 8:30, you're trading at 17.65. We've given up about $30 from that price level. We're down $38 technically on the session. That's about 2.2%, trading at 17.36. Silver's down more than $1 right now at 26.60. And notes and bonds, the story of the week, you could say. The 10-year off one tick right now, trading at 132.17. You got the 30-year positive by 14 ticks, but a little bit of negative action since 8:30 as well. We were just trading at 159.25. We've lost a full point since 8:30 this morning. Doesn't look like much on this chart, but that's just because of the volatility we had. We were basically trading at 159.25. We're basically a full point below that level at 158.23 right now in the 30-year. What that is correlating to when you talk about yields, you're talking about a 10-year right now of 1.496. We'll call it 1.5% essentially on the 10-year, and you're talking about a 30-year of 2.236%. The 5-year above 0.75%. The 5-year at 0.8% right now. All right, jumping around to the stories we got this morning. We got a lot to cover. The NASDAQ, as we all know, heads for the worst week since March. Didn't really know that, but some big numbers in the NASDAQ as you have the tech-heavy index tumbling 5.5% this week. Soaring bond yields, rattled investor sentiment, sparked sell-off in companies with frothy valuations, is how Bloomberg surmises it in their article early this morning. As we talked about, the NASDAQ really accelerating in a big way. And look at this. The trend is continuing, folks. We have the NASDAQ pretty decently positive coming into the opening bell. We've now given up 200 points in the NASDAQ 100 right now. Jumping around to some of the tech stocks. Let's check it out. Amazon down about 0.1%. But, boy, we were up trading in Amazon at a price level of 31.07. You just gave up almost 70 points in Amazon. We'll jump to some of the other big dogs. Apple still up 0.4%, but Apple just gave up $2.50 from where we were at the opening bell of 124. Google shares down about 0.25%, giving up some of the action as well. Did we cover Microsoft? Up 0.7%, but Microsoft had been as high as about 233. We're now trading at 230.35. Some of the other tech stocks, we had Salesforce out with their numbers last night. Why don't we jump over to what we have going on there? Salesforce revenue up 20% from last year. Forecast calls for similar growth rate. Company's planned $27.7 billion acquisition of Slack has yet to close that, getting a lot of attention, probably rightfully so. They beat on the top and bottom lines. They're expected to become, Slack's expected to become part of Salesforce in the full fiscal year. Earnings and guidance for that period lower than expected, though, hitting the market as you may expect on that. But man, strong numbers when you look at it. $1.04 versus 75 cents. We have some Salesforce in my newsletter for full disclosure. Revenue, a slight beat as well, $5.82 billion versus $5.68 billion. Salesforce reported 20% year-over-year revenue growth in the fourth quarter of the company's 2021 fiscal year. That ended January 31st. In the previous quarter, same exact deal, revenue growing 20%. Guidance for the full 2022 fiscal year surpassed estimates. Earnings guidance, so revenue guidance above, earnings guidance soft. You always want to see that from a long-term perspective, because if you're growing revenue, you'll be able to get your costs in line. Earnings will come eventually if you continue to grow revenue. But in the short term, if you're not making money, the market pays attention to that as well. For Salesforce, full year, which would include the impact from Slack. So they're already including Slack, which is the important part of here, okay? That has not closed yet. They're already including that within their guidance. The company called for about $3.40 of adjusting earnings per share on $25.7 billion in revenue, we'll call it. That includes $600 million in revenue from Slack. And we expect the recent merger and acquisition will be a 63-cent headwind on non-GAAP diluted earnings per share. A lot going on there. A little bit of volatility in a big way. As you see, we're coming right down to the lows we had on Salesforce. Now you put this thing on a daily, and we're coming down to some dicey levels here. We're almost filling the gap yet again from their earnings going back to August. The high of those earnings, $218.35. We came down to that price level. We make a low on January 15th. That low, $212.99. You take off to the upside in a big way right out of the gate. Now, interestingly enough, when you put this thing for an all the way run up, not only did we fill the gap, but that gap right at a 382 retracement of the full run up. So we're coming right into that critical level right now. 219.61 is where I have it on my chart for Salesforce. We're within $1 of that price level right now. 220.34 critical price level. We'll see how this reacts, whether you make it down to the recent lows of January, which is 212.99, as we mentioned, whether you come down to this area that we had the highs of before we gapped higher on their August earnings, that high, 218.35, and we may be just about to get a 219 print in Salesforce as tech stocks back in the positive. We're going to get some volatility today, folks. A Friday coming into the market with the volatility we've had going on. And how about the VIX? You want to see the volatility, right? Yesterday, we go from the beginning of the day, 21 handle, right? Check this out. We actually get a 21 handle on the VIX in the first 15-minute bar of the day, and we end with a 31 handle potentially. Now, we backed off a bit towards the end of the day, but the VIX shot up almost 50% in the day. You see the volatility right now, 28.78, always interesting coming into a weekend, and gold accelerating lower in a big way as well. All right, folks, stay tuned. We got a lot to talk about. We got some news. We got some fundamental numbers out there this morning as well we're going to go over. We got stimulus getting voted on today. We got Foot Locker earnings. We got a lot to cover. Stay tuned, folks. We'll be right back.
Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We have the S&P's futures negative 10 right now. NASDAQ 100 positive by 50. A little bit of volatility on the opening bell. S&P is in a dicey area, though. You don't have to be a technician to see that we are right near the lows that we've been bouncing around at towards the end of the day yesterday. Yeah, we've gotten a couple bounces, but every time we have, and these been substantial bounces, folks. I mean, we're talking about a price level right now. The S&Ps were right near the lower end of that boundary of about 38.10. We did make it down to about 38.01. Maybe you call the lower boundary line about 38.07. The upper boundary line of the highs we've made, you're talking about 38.43. So you're talking about almost a 1% range that we're bouncing around from lows to highs. But, boy, it's tough when you look at where the strength is in this market, folks. Look at this accelerating volume that we had. Whether it was 930, you go to 945. I mean, we're talking about 70,000 contracts. Let me jump back and zoom in here. You're talking about at 930, 122,000 contracts. At 945, 105,000 contracts. The acceleration lower at 10 o'clock, 100 and almost 30,000 contracts, and we're right near the lows of that level right now in the S&Ps at 38.13. All right, jumping around to some of the news. I mentioned the fundamental data out this morning, so this driving some of the action at 8:30. Personal income leaps 10% in January thanks to stimulus. Inflation, quote-unquote, still in check is how they categorize it. Personal income rising 10% in January. Market was looking for about 9.5%. The increase largely attributable to government stimulus checks and enhanced unemployment benefits. We talked about yesterday. We got weekly unemployment claims, weekly initial unemployment claims yesterday in the 700,000s. Down from the estimate of about 800,000, continuing claims down as well. But when you look at the total number of people on some form of economic assistance, whether they're shifting from basically state unemployment rolls, they use up all of their state unemployment, then they shift to the pandemic emergency programs. You're talking about 19 million people on some form of economic assistance because of the hardships they're going through right now. But nonetheless, when you talk about the stimulus, it's contributing in a big way for personal income. And when we shift to inflation, core PCE inflation up 1.5% year over year, in line with estimates and well below the Fed's 2% target. Encouraging data out there, but the market, when you look at what's happening, I mean, that's where the gold run really started beginning. You shift to where we were. There's your 830 volatility. You spike up briefly, and gold continuing to trade lower, now down by almost $50 to $17.26. And that gold contract jumping around to notes and bonds, a little bit of a lift, but boy, you're just chopping around near the lows here as you get the 10-year up 2 ticks at 132.21. All right, continuing the discussion of yields. Interesting point to make here. I was discussing with some friends last night. All right, when you get an acceleration like this, it changes the dynamic a bit. For the longest time, we had the dividend yield in the S&P well above the 10-year yield. Think about that, right? You could buy stocks and basically be doing it for the dividend, and you'd be beating the 10-year yield. That's not how it's supposed to basically work, folks. You're supposed to be buying notes and bonds for dividends and buying stocks for stock appreciation. Now, yes, dividend stocks change that dynamic in a big way, but yesterday you had the Treasury yield of the 10-year soaring to 1.61%, right? We've backed off a bit. We're at about 1.49%. The S&P 500 dividend yield, now this is changing as well. As we see the S&P 500 pull back, right, the dividend yield would go up, because as you get lower prices, the dividends, if they stay the same, is going to yield a higher yield on lower price stocks. But as of yesterday, you're talking about an S&P 500 dividend yield of 1.43%. So we now have what used to be an expectation for normalcy of the 10-year note yielding above the dividend yield in the S&P 500. As CNBC puts it, not a huge fan of CNBC, but I pull them up for some news occasionally. The milestone is important to large investors who monitor valuations across assets, as treasuries are considered a risk-free rate. They should be. I mean, hopefully we never see a day where our country defaults on our debt, because that would mean catastrophic failure of many different parts of the economy. So that means equities have lost their premium over bonds, yet are riskier securities, something to keep on your radar there. At least to keep on your radar, because that's a critical level. When you think about it, that's how it should be, folks, okay? You shouldn't be able to buy stocks with a higher dividend yield in a market where you're actually getting appreciation at the same time. Not usually how things work. All right, what else we got going on? Jumping around. Let's start it off with DraftKings. We got a few companies with earnings in a big way this morning. DraftKings shares positive today after reporting. We'll see if they're still positive, though, because things changed pretty quickly in this market. DKNG is their symbol. They are positive by 2.2%, but we've given up about $3 from the volatility to the upside. DraftKings has said it has 1.5 million monthly unique users. As its fourth quarter, the company's raised its revenue outlook for the fiscal year to a range of 750 to 850 million, to the range of 900 to 1 billion. The online gambling business, it is a good business to be in. How about revenue? 322 million versus 232 expected. How did they miss that one, man? That is to the tune of 90 million on a beat, which is almost a 40% beat on the revenue. Net loss, 266 million. I mean, remarkable, right? They are just putting money out there, trying to grow. They have 1.5 million monthly unique paying customers. That's the big deal there, all right? Now, I know they offer some form of free gaming on there. Basically, that's just a promotional tool to bring people into the ecosystem, hoping that they eventually start paying. It was estimated that they were going to have about 1.43 million, so a slight beat there. Average revenue per monthly unique payer was $65. That's a decent revenue, folks. I'm not sure if you're familiar with how these sites work, okay, but they're basically taking a VIG. They're taking a bookie fee, essentially, right? If you're now, I know that they have straight out gambling. I'm familiar with their product in terms of fantasy. Let's say you play a $25 fantasy lineup contest. Maybe you're paying $1.50 or $2.50 to the house, right? So that's not money gambled. If they're making that amount of revenue per monthly unique payer, those people are putting up some serious money on that site. And you're talking about 1.5 million people per month donating say donating, right? Not really. But providing $65 in payments, it's a strong sector to be in, folks, in that sector. And you're going to continue to see states expand that as they look for revenue, especially right now where states are seeing declining revenue in a big way because of the economic slowdown in the last year. So DraftKings up 3.1% on that. We'll check out Penn Gaming. They're up 3.2%, probably on the expectation as well that the gaming sector holding up pretty well right now in a big way when you look at those numbers from DraftKings. All right, checking back to the markets, we've kind of stalled right near these lower levels. You get the S&Ps at 38.12. We're only basically an hour into the trading day. Dicey action when you consider we're into a Friday right now with the markets, especially the NASDAQ 100, as it mentioned at the top of the hour, having one of the worst weeks since March when you go back. Now, you want to see something dicey. You put this thing on a daily. Folks, we've almost given back all the gains back to September 2nd, almost to August. The high, September 2nd, 12,465. You're 400 points away from the highs we had within a couple days of August. Talk about some pullbacks. Stay tuned, folks. We got some more earnings to go over. We're going to talk about Foot Locker when we get back. Stay tuned.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got the markets accelerating lower, trend continuing. We get the S&Ps now. Check this out, folks. We are now below the lows that we made all of this week, lows of yesterday even. The S&Ps now down 35 points, trading at 37.91. Watch out, folks. Not the action you wanted to see. I mean, we're down 35 points technically on the session right now, but we just gave up almost 60 points from where we were trading at 45 minutes ago. The highs made this morning, 38.51. We're trading down right now 37.93. You got the Dow off 442 points. Check out that action on the weekly basis. Far below the lows of yesterday. NASDAQ 100, not quite to that level right now, 12,779. The lows overnight, 12,662. And the Russell, right near the lows as well, 2161. I mean, the Russell just gave up. We were at a high of 22.29. You're talking about almost 70 points. We just gave up in the Russell at 21.63. All right, as I mentioned, checking out some of the stocks with action this morning. How about we started off with Foot Locker? Shares down dramatically. We'll jump over to their chart. FL is their symbol. A little bit of a pop from the lows. We're down 8.6% right now, though, on Foot Locker. We'll take a look at the daily chart. It's been quite a run from the lows of March of 1746. We make a high recently of 54.77. We've given back some of those gains. I mean, you're going to trade lower anytime you see quarterly revenue coming in below forecast, comp store sales unexpectedly declining, and they also reported a quarterly profit of $1.55 a share. They beat consensus by 20 cents. But we talk about it many times, folks. When you see an equity take in less revenue than the market was thinking, but somehow beat on earnings, yeah, it's better than missing on both, okay? But you can't cut costs to growth. It doesn't happen, okay? Now, cutting costs during this last year, a tremendous value for many companies that you had to pare those costs at a time when many companies losing revenue. But that is not what the market wants to see. Foot Locker's down 8.6% today. All things considered, relatively near the all-time highs we made. I mean, that only backs up the price to where we were at the start of February right now. Foot Locker, though, suffering today, down about 9% on their earnings. We talked about DraftKings. Cinemark, movie theaters. Talk about a tough sector to be in over the last year. Movie theater operators stock dropped 2.6% in the pre-market action after it reported wider than expected loss for the latest quarter. We'll pull up Cinemark shares. CNK is their symbol. Cinemark down about 1.1% today. Not too bad. I mean, these equities that are just waiting in the wings for the reopen, it's going to be tough to crush them in the near term because there is so much optimism. I mean, can you wait, folks, to go see a big blockbuster movie in a movie theater where it's packed and you're not worried about COVID? That's one of the things I'm excited for, among with many other things. Seeing my family, traveling, restaurants, outdoor events and concerts, big sporting events. I mean, Tampa had one of the best sporting years ever, folks, during COVID. I was unable to attend, didn't really want to attend one of those big events, whether it was the Lightning, right, winning the Stanley Cup, whether it was the Rays almost winning Major League Baseball's championship, and then, of course, you got Tom Brady and the Bucks winning the Super Bowl. Not really a time that you could attend one of those events. You could, not something I was interested in, nonetheless. AMC backing off 5.3%, probably on the heels of Cinemark earnings as well. You're seeing some real volatility in some of these equities. Now, AMC, that's their own animal because they are right in the heels of the Reddit retail trader boom. We saw the run this had from $5 up to a high of $10.89. We're backing off today. Be careful of any of these equities getting in the winds of the retail traders. Speaking of the retail traders, folks, head on over to the front page of TFNN. Our man Basil Chapman, he knew that this trend was not over and how it was going to impact the markets, folks. We were talking, over the last couple of weeks. Basil said, I want to do a webinar because I think the impact that what's going on here could have an impact of what's happening in the future market. So Basil's put together a webinar. It's going to be coming up on Tuesday night. It's going to be a 90-minute webinar. If you're currently a subscriber to the opening call, you gain free access to this event. It will be archived 4 till 5:30 p.m. Eastern time. The webinar he'll be hosting, what impact will the tremendous increase in the public's participation in the stock market these past few months have in 2021. All right, he's got a number of points he's going to be talking about. Is it market positive? Are there historical examples? What are the negatives? What sectors should you be looking at? The retail traders and the public's participation. I mean, the game has changed forever, folks. All right, Robinhood bringing in all these retail traders. The game has changed, and that doesn't mean good or bad. I think it's good to have people in the stock market. There's all this discussion about the gamification of stocks and all this so forth. People should understand that in the short term, it's not a game, okay? But it is a form of basically gambling if you're trading in the short term. And if you don't think hedge fund titans of Wall Street understand that it's straight out gambling, then you're not doing it right. That's my attitude. You're not. Because it is a form of gambling when you're trading in the short term. You saw it happen. I mean, my friends and I were almost talking about it's a game of hot potato. I mean, GameStop has literally turned into a game of hot potato that has no basis in reality. And the only game is who's the first person out, and don't be the guy or girl that's the last person stuck with that hot potato once it cascades to lower prices, except this game is getting played for hundreds of millions, if not billions of dollars. So Basil's going to be in there talking about what sectors, how does this portend, does it portend a sudden deep market slump? What technical tools should you be looking at as the public is coming into the market in a greater way than recently? As the economy opens back up, will consumers go back to the way things were? What COVID-impacted changes will become a part of the new economy? Notice how Basil doesn't say, and this is my little analysis, he doesn't say, will any COVID-impacted changes become a part of the new economy? Because I would say there's definitely going to be COVID-impacted changes that are going to become a part of the new economy. He says, what are they going to be? Because they're happening, folks. Our lives have changed forever, and that doesn't mean we're going to be wearing masks. It doesn't mean we're going to be staying home, but it does mean that our personal trends, I mean, the work from home trend, right? The ability for people to work remotely, the ability for people to just order food, whether it's Uber Eats, whether it's DoorDash, all of that stuff. Our habits have changed in some capacity, and Basil's going to be discussing how does that become a part of the new economy, along with many other aspects. So that webinar, check it out. You can sign up for a month, folks, for $149. You can sign up for 6 months for $695, a year for $1195. All of those come with a 30-day money-back guarantee. You can be in there for the full 30 days. If you decide it's not what you thought it would be, you simply cancel, ask for a refund, no questions asked. You get 30 days of the opening call. You gain access to Basil's webinar coming up Tuesday. He's got a bunch of archived webinars in there as well. I'll be in there Tuesday night right after my dad's program at 4 o'clock, 90-minute webinar. Check it out on the front page of TFNN. All right, we got the S&Ps catching a little bit of a bounce. Pretty remarkable when you look at this chart in terms of what the bounce looks like from where we've been. We just got an 18-point bounce. We're approaching almost a 20-point bounce in the S&Ps, and it looks like barely we've notched a positive move. But that's because we were just trading at 39.34, folks. We traded down 150 S&P points from Wednesday night. Stay tuned. We'll be right back in 3 minutes.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Are you grinding in the market but seeing little to no return? Or are you a successful trader simply looking to make his job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month and try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
All right, folks, as our man Kevin Hinks said in one of our interviews earlier in the week, the story of today is not written yet. We're only an hour and 13 minutes into the trading day. We've now bounced 35 points in basically, what are we talking about, the last 13 minutes. Check out this bar we got going on in the S&Ps, folks. Doesn't mean that it's going to continue that way. We're getting a little bit of a bounce right now, though. We were just down at 37.85. We're now trading at almost 38.20 in those S&Ps, accelerating higher in a big way. Jumping around to what else we have going on in the markets, checking out some of the stocks. Etsy out with their numbers. Stock surges on earnings beat and strong guidance. Let's check out the Etsy chart to see where we are right now. You got Etsy up 10%. We'll pull up the daily. I mean, check out this chart from $29.95 to $217.11. Etsy shares. Now, I made my first Etsy purchase. Just a little anecdotal data. Made my first Etsy purchase prior to the Super Bowl. Bought a little onesie for my newborn son with the man, the myth, the legend, Tom Brady, the number 12 GOAT on there. But Etsy, I'm not the only one buying products on Etsy, folks. Check this out. So Etsy, how about $1.08 a share versus 59 cents? How about revenue of $617 million versus 516? Getting in, I mean, way ahead. Yeah. Let me pull this up. They expect revenue of the current quarter to be 513 to 536, way ahead of the forecast of 383. Remarkable. So they had revenue of 617 versus 516 expected. For the current quarter, they're looking in the ballpark of maybe 520 million, and Wall Street was looking for 383 million. Interesting when you break down where they've accelerated. How about face masks? Face masks, one of the categories that has thrived. Masks made up 4% of the total gross merchandise in the fourth quarter. That's a step down from 11% in the third quarter and 14%. 14% of their gross merchandise value in the second quarter was face masks. Well, that is going to go away, thankfully, for humanity purposes. hopefully, but I'm pretty confident, folks, over the next 3 months or so. In the fourth quarter, Etsy said it attracted 61 million new or reactivated shoppers to its site. I'm one of them, and recorded nearly 160% growth in habitual buyers. I'll tell you, I enjoyed the service. Now, it is expensive, especially if you want something shipped to you in a timely manner. I happen to want my Tom Brady GOAT onesie prior to the Super Bowl. I had to pay like 10 or 15 bucks to get it expedited, and that's just not for expedited shipping. That's because these are people with home businesses manufacturing goods themselves. So if you want to jump to the front of the line for your product, you have to pay a premium service. I was willing to pay it, had paid the service, right? Jumped to the front of the line. It was great. Showed up. It was a great product. I'll check it out again. And I'm not the only one, with Etsy up about 10% today on their numbers. DoorDash, not quite the same performance. We'll jump over to DoorDash. D-A-S-H. Dash is their symbol. They're down 3%. You pull up the 15-minute. We were down to 144 on their numbers, though. We're up $17 off the low we had last night. DoorDash stock falls after company drops first earnings report since going public. Now, check out this chart on the daily. Right, for all the acceleration we've had, we're now below kind of where we started off. DoorDash, which was December 9th, they go public. Not sure what the exact IPO price was, but in terms of where it actually traded that day, you had a low of 163. You're below that level right now at 161.43. DoorDash, getting into the numbers. How about revenue of $970 million versus $938 million expected? The growth of this company, revenue for the quarter represented 226% year-over-year growth. DoorDash's IPO occurred, of course, as Americans continued to rely heavily on food delivery services. DoorDash saw booming demand with total orders in Q4 up 233% year-over-year at 273 million. Staggering growth, but guess what? That is, I mean, talk about being perfectly positioned for an area in terms of being in food delivery. You're about to go IPO. Your business is accelerating. DoorDash. Now we'll jump over to Uber. We have some Uber in my newsletter, Rocket Equities and Options. The difference here is Uber, of course, they have Uber Eats, right? They bought Grubhub, I believe. They've accelerated from a low of $13 up to $64.05. We've backed off about $13 since then. Uber is going to be able to capitalize on the reopening of the economy when you think about rides, when you think about rides to airports, right? You think about rides to drinking establishments for the younger folk, whatever it is, out partying on the weekends, during the week, spring break, etc. Check out the chart of Lyft here. If you want to see the acceleration that you're going to see in some of these ride-hailing companies devoid of food delivery, all right? Lyft does not have food delivery. It's not a part of their business. Yet, look at the acceleration you have to Lyft, up 56.21 from a low just in November of $22. All of that is priced into the acceleration they're going to be seeing for food delivery. 56.21. Now you pull up Uber, and yeah, they've paired some of those gains because rightfully so. You're going to see a pullback in the food delivery business. But this is one of the things that I was touching on when I was talking about Basil's webinar coming up Tuesday. This is a trend that is going to stay with us in some capacity, okay? What that capacity is, that's your best guess versus mine as well. But this trend is not going away, all right? The ability to deliver food from home from any restaurant you like, all right? Whatever it is, I'm a user of Instacart as well. I love Instacart. Saves me so much time. I'm paying a little bit of a premium for that delivery service. But the ability to not have to go to grocery stores, especially with a newborn son at home, folks, time is a very valuable commodity right now with everything going on at home. Using that service, yes, I got brought into that service during COVID, but I will probably stay with that service after COVID. So Uber going to lose some of the steam that they've had after we reopen. But boy, I'm surprised to see Uber. And again, we have Uber in my newsletter. There's your disclosure for bias. But I'm surprised to see this pullback to the area of $51 when they are going to be experiencing a dramatic part of growth in their ride sharing business. We'll see how that plays out. Let's check in on Disney. One of my other favorite stocks, Disney, makes an all-time high on 3 consecutive days this week. Monday, Tuesday, Wednesday, we make a high at $200.60. Disney pairing some of those gains. We're back at $188.70 right now on Disney. But man, strong growth on Disney. Just got an email as a Disney Plus subscriber. They're jacking the prices. We already knew that. They came out with that. But they got some price control, folks, and Disney's got a bright future in a big way, putting it on the daily. Whoops, there's your weekly, right? Talk about an acceleration. We go from a price point of $152 in December 2019. I mean, look at where we are. We're only about $30, $36 above where we were trading at in December of 19. Once Disney gets parks back open, once the movie theaters open back up, and they're approaching 300 to 350 million subscribers across their brands, and maybe year 2024, Disney's got a lot of room to the upside, folks. Stay tuned. We'll be back in 3 minutes, folks. Give us a call, 877-927-6648. We'll be right back.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, just $89, exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're in store for quite a day of trading today. We got the S&Ps now up approaching, we were just up 45 points from the lows we made within this hour. The S&P is just an inch back to the positive. We're now back negative 2 points. NASDAQ 100 now positive by 110 points, 12,940. You're up almost 200 points from the lows we made earlier this morning. Jumping around to some of the equities with news in this final segment of the program. So you got rocket companies. They're out with their numbers. How about earnings of $1.09 a share compared to an estimate of 87 cents? Revenue topping forecast. Completed a year of record mortgage volume, announced it would pay a special dividend of $1.11 a share. That's probably what's driving this company, folks, higher so far today. You're up 13.83% right now. You're up at $2.74. I'd be careful of getting into this equity right now as we have an area of rising yields. That might be a tough. I mean, who has not refinanced right now? If you have a 30-year mortgage in your home and you were considering refinancing, hopefully you took advantage over the last year of that opportunity. Not sure where you go from there in terms of the mortgage company. They go public in August. They're sitting right near those levels of that first day of trading right now, $22.57. You also have AT&T. They're spinning off DirecTV and other pay services. The deal's going to provide AT&T with $8 billion in cash. They got private equity firm taking a 30% ownership. The deal values that pay TV service at $16.25 billion. AT&T, you're down about 0.6% today on that news. And how about Beyond Meal? Striking a 3-year deal. Good for them. I mean, 3 years to be the preferred supplier for McDonald's McPlant. Beyond Meat, there's Beyond. They're positive by 1.1% today, but talk about giving it up a bit from 160 and change to 145, and we'll finish it up with McDonald's. McDonald's today down about 0.25%. Stay tuned, folks. Live programming all day at TFNN, some Friday action. Thanks for tuning in, folks. Have a great one.